Moving ahead, ladies and gentlemen, the next one is a fireside chat. The topic is credit lines on UPI, credit accessibility for all. And for the same, I will request our speakers to join us on stage, Mr. Rahul Solanki, UPI Senior Product Manager, NPCI, and Mr. Vikram Kulkarni, Principal Consultant from the Digital Fifth. So, can we have a round of applause for both of them, everybody?
Yeah. Hello and good afternoon, everyone. So I'm here with Rahul, who is Senior Product Manager at NPCI, and topic as all know, we would like to understand from him more about credit lines on UPI, like what it is, how can it will be impacted, how we can use it in better way, and what are the strategies to be followed. So thank you for your time, Rahul. So to start with, Rahul, would like to understand from you, how do you define UPI credit on lines?
Hi, good afternoon, everyone. So pre-sanctioned credit line is something which was, if you look at the payment vision given by RBI 2025, there's always a vision of underwriting million of citizens of India. So how do they proceed with that? So ever you want to come across that what new innovation is supposed to happen to regulators, always go through payment vision because you have a clear clarity about what's going to come on next. If you look at the 6th April monetary policy announced by RBI, it was very specific with respect to that pre-sanctioned credit line can be given by the banks. And obviously, when you say pre-sanctioned credit line, it's very open-ended. Pre-sanctioned is somewhere perceived as a pre-approved at some places with the banks. Some call it pre-sanctioned, some call it pre-approved. So that is an intermittent word being used by the bankers today. So it clearly means that it has to be churned by banks. So today, as we speak, most of the banks has this expertise and process defined at the end, that how do they actually churn the data, because all the banks today have their details of their own existing to bank customers. They run a soft bureau check with the bureau to understand what is the credibility of the customer, and they define a specific limit to the customer, which they are able to do it today as we speak. But getting it on UPI, how would that actually impact is something which everyone is keen about in the market as we speak. So today, when a customer avails a credit line from the bank, what do? They actually make a credit to your bank account, correct? That is the only way it happens today. And then the process starts with the interest charging by the banks. But if you look at the 4th April notification by RBI on pre-sanctioned credit line UPI, which has given a liberty to the banks to actually innovate a product, which means that bank can define a product which can be linked on UPI. So far, if you actually see the journey of UPI has started with linking the current account, linking the savings account, linking PPI wallets, which can be interoperable as well for full KYC, and RuPay credit card on UPI, which has been doing fantastic and growing month on month as we speak. Now the credit line becomes a new funding account for the customer to link on UPI and do a spends. Now, how does bank envisage this? Because today, when I talk about the existing loans which bank has, they have a personal loan, they have a consumer durable loan. It can be secured, it can be unsecured. There are few loans which can be revolver, non-revolving. So it totally depends on how does bank innovate is a game changer which is going to happen. It's not that the way it currently works in the bank and the way the all credit line products work in the bank. When it's a credit line, it's open-ended. It does not categorize to any specific product. It defines about how do you make an architecture at your bank end to make it sure that it links on UPI and the spends which are done through UPI, and he's being charged accordingly. So there are two kinds of product which I broadly understand. Is that how do you categorize credit line on UPI? So I would not define a product, but I would say I would define two categories. One can be an interest-bearing product, where the banks are currently doing it, and one is the interest-free credit period, is something which would be a game changer for the ecosystem or for the citizens. Because today, till now, bank were not in the place where they can actually give a credit-free period to a customer. But the notification allows banks to take a board-approved policy and define a product where they can actually define a product for the customer, which can be a different credit period, it can have a specific interest rate. And it would actually become a push product, a pulled product by the customer, because today any loans which you want to take is something that I would find a need for me to go to a bank, right? Bank gives me a lot of messages saying buy personal loan, buy CD loan, but unless and until I don't need it, I don't take it. how do a bank change this entire mindset of a customer, that what if Rahul gets a personal loan and he says that you are not being charged on a day one, you are charged when you are actually spent from that. Let's say I get a limit of 2 lakhs from a bank, and for a personal loan today, how it happens that it actually goes on my savings account, and then I start spending it, and the interest actually hits me at a time, right? But if a bank says that, I offer a credit line product to you which is interest bearing as we speak, then whatever you spend is something you have to pay interest on that part and not the entire amount. So the need for me is very easy. It can become a kind of a pull product for a bank perspective, that customer is asking for it. I don't have to wait for an emergency where I actually avail a loan from the bank, but I can already have it with me. And the interest free part is something that which will actually make a humongous change in the ecosystem, because as we speak that today most of the customers are not having credit card is more looked from a perspective of an aspirant product, or maybe an a status kind of product which not everyone has it. But this credit line product with interest free can actually bank and target their own ETB customers who are still dormant and not doing transactions much on their own products which they have, and they are moving to different players. It might be a bank, non-bank. What does bank do for it? Bank can actually take a great leverage of defining a product for them, making sure they start with a small credit limit. It can be as low as 5,000, 10,000, 20, or maybe go till 20 lakhs. It depends on the bank risk appetite, bank's underwriting model. So it totally depends on how does bank look at it. So it's very open-ended. It's how banks are perceiving it. We are interacting with multiple banks as we speak, and everyone has a different thought vision, because every customer of every bank behaves differently. So the customer of private banks has a different way of spending. He has a different attitude towards looking at a product vis-a-vis PSU banks. So yeah, as of now, only scheduled commercial banks are there which are allowed to participate in this kind of product offering. I think there are 22 which are private banks and 12 are PSUs.
Yeah, got it. Thanks, Arul. Thanks for defining the product, I would say. But from the customer perspective, how do you envision that how the customer will be able to grasp this credit line?
So I think it's a very initial stage as we speak, because today we part of the entire ecosystem. We understand what credit line means. But if you ask to a layman, it's difficult for him to understand credit line. So it's very important that whenever a bank defines a product or thinks about it, the positioning of the product matters the most. The communication matters the most. What is that he is getting out of it? Because today most of the customers understand this basic functionality, that this is credit card, this is personal loan. But how do you define a product to a customer is something which gonna be a game changer. But as we speak, the ecosystem is still learning about it. They are doing their own homework to understand their own customer base. We are also doing some certain surveys to understand that how do they look at it, because we don't want to name a product which is difficult for a customer to understand. But as we speak, the banks are doing great. We have got pipeline of 10, 12 banks who are already working on it, and maybe they might go live in by March end or April first week.
Sure, got it. I mean, considering the UPI being so successful story across the globe, and one of the role play of the ecosystem, I mean, considering the banks, TSP were there, PSP were there, how do you see specifically the role of the TSPs evolving in credit lines?
So I think the TSP, the fintech players, I think they play a major role if you ask me, because every bank has a defined process of underwriting, right? And the way the traditional underwriting model, the way it works, bank has to think out of the box, right? It's not going to happen that the way I'm working currently will help me penetrate more of the customers. So the TSPs obviously has to define a new product altogether. When I say innovation, I give an example of a personal loan or a consumer durable loan. The way it works currently, it cannot work the way it is. There has to be innovation where a TSP has to bring a relationship of parent and child. Now, for example, if I say a personal loan, it's a one-time disbursement, right? And then the interest charges. But if I look from a different perspective, from a bank lens, I have to define a product which obviously a TSP has to support. It might be a different system at the banks, and it might be LMS, CBS, CMS, and many more LOS. So it totally depends on how bank envisage. But with the TSP, as you said, now if I look at a personal loan, I have to define, and if I want to link on UPI, I have to define a relationship. Let's say a personal account number has 1234 ending with 1234, and every time I make a spend, I might book a loan in my system, which a TSP has to offer, which is linked to my parent account. So the changes are there. It's more of the innovation of the fintech players and the way underwriting model works at the banks and what they can bring. I think before the session we had talks about intent to pay. Everyone understands through their own credit line model to a bureau score that how he's behaving, what's his credit history. But alone that would not work to underwrite the new generation, because if you look at it, there are people in the country who are don't have a good credit history. The reason behind is that they are never exposed to a credit world. They don't have a credit world. If they don't have credit world, then there is no point of having a credit history. How do you make sure that these guys come to the credit ecosystem? The one way of looking at things is that you understand the relationship with the banks. Now today bank has to further go back and understand that let's say I have been heavy on UPI through my savings account. In that case, what's my behavior pattern? One of the way of looking at things is that where am I spending? Are these merchants which are not fraud prone? One of the way of looking at things. Or what's my monthly spends? Where am I spending? Do I do any transactions which are failing due to insufficient funds? These are the models, just small parameters, but a good impact for you to understand that is he really capable of making a payment in the future or no? And that is where bank has to come to an strategy or position of product that maybe my CIBIL score might be just at the par or below par, but he's been doing great in other products of the savings account. Is something like bank should think about lending a small ticket size. And further, looking at the behavior pattern of mine, maybe I'm making a repayment on time, or maybe my spends are still good. Maybe bank can further grow and increase my credit limit as we speak. So initial stage, most of the banks are targeting to have a conservative approach to start with a smaller credit limit of 25-30K, and then as we speak, then it might further go up.
Got it. And from the banks, I mean, you have covered it broadly, but if anything you can add from the perspective of banks who are being the integral part of this ecosystem, what should they consider while building this product per se?
See, my only submission, I mean, we speak with the banks quite often. I mean, the banks knows what we speak. But just to highlight that bank does not have to try to fit in the existing traditional product of the banks which they have into this. So there has to be innovation, because today as we speak, everyone understands the product very well, which are there in the market. But if you want to make a bigger impact and get new innovation, there has to be a defined product. So I mean, there are a few key principles of different product which I think everyone understands. But to start from the value proposition, why would I go for a credit line given by X bank and not Y bank? Whether both are giving the same kind of product, but what's the value prop for me to avail that product? That is one of looking at things. Second thing is talking from a customer segment. I mean, the way bank churns the data and they pre-approve certain customers. What is the segment which banks wants to offer it? Are they really want to offer to a Gen Z, a Gen Y, or do they want to offer a conservative approach that whoever they are exposed to credit world, I will give only to them? Or they are thinking beyond the world that, let me start with something, giving a small credit to a customer who are not great with credit history because they are still under making it, but I can offer a small credit. That is one way of looking at things, because those are the customers who will be exposed, and those are customers who already keep on spending, because the existing ones are already there. If you want to get a new customers, if you want to retain your own customers, I think that would work the best. Third thing is the important part is defining the end-to-end credit journey. Now today, the credit journey plays a very important role. We spoke on credit lines and UPI. The availing of credit line is still at the bank's end, right? It does not happen that I get a real-time credit line on UPI on my UPI app. It's something the way we do it for a savings account, that you open savings account and then you come and link on UPI. You don't get real-time account opening on UPI. You don't get real-time credit card on UPI. Similarly, credit line to be availed by a customer is a journey which bank has to define, and that is a bigger project than actually underwriting it, if you ask me, because if you underwrite a customer and you cannot make sure that a customer is aware about a credit line and the customer is not able to avail it, I think it does not work that great. So a journey which a bank defines at their end, it's something very important that it has to be a minimum click, as we all understand this minimum click concept. And I think the compliance plays a big role, which actually impacts the digital journey is something which bank has to work upon. Where and bank today has multiple channels, which they can make use of it. They have phone banking, they have mobile banking, internet banking, net banking. I think the list goes on. But how do they position that? And when the customer actually avail the credit line, should be minimum click. The fourth point is the portfolio. I think that would play a bigger role in the entire world, that how the collection is being taken care of. So most of the banks are tightly coupling up with UPI autopay for credit line products, so that the repayment happens on time, the delinquency does not go that big. So these are the 4 or 5 components which a bank has to make sure that they define at their end when they actually define a credit line product for the customers. And we see a great prospects for the banks and for the customers, merchants as well, to avail this product. And our vision is being obviously underwriting. I mean, not we as an NPCI, but as a bank to underwrite all their customers, and maybe in future the NTC, NTB would come in the picture. Right now, what I foresee is that NTB would take little time. The reason behind that, bank would like to understand the behavior of the ETB customers, and through their learnings, they might move it to NTB, NTC as well.
Sure, Rahul. One last question would be like, how do you see the impact of credit UPI lines from the consumer perspective?
See, as I said, from consumer perspective, a lot of underpenetrated customers are still there, which are not exposed to credit, though they have an appetite. But since they never got a credit product from the banks, they couldn't make credit history. So these are the good large segment which we foresee, and we have done some good survey research on that. That there are still a lot of people requesting for credit, but due to maybe the bureau score, as I said, they're not able to get it, but they are quite heavy on their savings account as well. With respect to linking on UPI, obviously the acceptance is a bigger play which will come in the picture. We have got like 70 million plus merchants accepting UPI today. So the spends is not a concern as we speak, but is how the bank defines the credit line, and the availing of credit line is something which is very important.
Sure, Rahul. Sure. That was insightful. I mean, I could at least get some of the information which was very much I was looking out for. Thanks. Yeah. No, that's, yeah.
Yes, thank you all.
Thank you. Thanks, Rahul.